It's going to be very cozy on the couch. So I'm taking a seat here. I hope that the live stream will capture everything. You know that we're live, right? This is live streamed on the internet. World Wide Web here from the Hub Conference on the Black Stage. So again, a very warm welcome to you. First of all, I want to do a couple of topical questions and just give a very short answer on these. Jonathan, Trump, your first thought on that?
Yeah, well, I think we're all still in shock. I think since we are an investor that also actively invests in the U.S. and has the longest history in the U.S., we obviously see the biggest impact there. I think Trump yesterday announced that he wants to limit H-1B visas, which is one of the most important visa classes for our U.S. companies to get international talent. I think if we see the U.S. companies getting less international talent, it will be very bad for the ecosystem.
Okay.
I'm not sure. I saw it coming because it was all the way down. I think it could be critical.
You saw it coming?
Yes, I saw it coming. I bet against it, but I saw it coming because it was all the way. It was a little bit critical. I think let's wait and see what he's doing. He has so many different people, so many different influences. I'm not sure if it has a positive or negative impact on everything. I was super surprised that the stock market didn't went down. It went up, which was quite interesting. And let's wait and see.
Yeah. Nikolas?
I think, generally speaking, it's really a problem for the startup ecosystem if freedom of movement is restricted. So we have the same discussion with Brexit. And also one reason why Berlin is flourishing is that it's so easy to import talent with a very unbureaucratic process. So if these things change, and as a side note, so I think I had to burn all my Peter Thiel books. So that was, of course, as Jonathan said, kind of a shock, and let's see what happens.
Okay.
Yeah, I agree. Let's wait and see. I don't expect any short-term impact. I do see potential impact in the midterm, and I'm concerned, I must really say, but yeah, let's see how bad it's going to be.
Okay. So later on, if you have any questions, we will also open up to the audience. So on all the topics, these four gentlemen will be also happy to answer. So what will it actually mean for the European venture capitalist ecosystem, Jonathan?
You mean Trump and Brexit? I mean, I think it's going to be net negative for sure. I think in the short term, there's definitely a Berlin advantage. So we see companies from the UK relocating to Berlin. We have a lot of fintech companies that started in the UK and that originally wanted to use the license they received in the UK to passport all across Europe. Now you cannot do that anymore. So I think we see companies moving to Berlin to continue their business. And also, if there's a question, should I go to London or Berlin? I think right now Berlin is definitely in favor.
Yeah.
I'm working for a US-based company, and we have many investors, but many investors from outside the US. I don't see any changes in our investment worldwide. What I see at the moment is quite interesting, and the Brexit, the influence of Brexit is quite bigger than the other one. We have many companies who are very successful in the US coming over to Europe, and the first question is, where should I be based? Should I be based in London, as typically, or should I be based elsewhere? And it's a huge trend to be based in Amsterdam, in Berlin, in London, not in London, in Paris or wherever, but they're not going to London anymore because it's the insecurity, what's going on there. This is a much bigger effect, Brexit, than the Trump thing yet.
Okay.
I think that for a whole generation or even like 2 generations, the idea that United States was kind of the holy grail to go there as an entrepreneur is a little bit gone almost. So let's see what happens the next couple of years. Maybe that changes again, but I think that was a trend that already started under the George Bush administration. And so maybe, other ecosystems will win, but I totally agree that, especially talking about Brexit, the idea would have been that a united Europe competes against Asia and US ecosystem, and not that we divide again. So it's a situation where I think everybody loses, but if you zoom in, there might be some winners on a small scale.
Yeah, to build on this, I think even though it might be a net negative on the global venture industry, I do believe it's a net positive on the Central European venture industry. What Achim was describing for the Brexit, I think is certainly true. In the midterm, we will see capital flows being diverted to continental Europe instead of London, and we also see capital flows coming in from Asia and other parts of the world, not US, might be redirected to Europe instead of the US. And that's not only capital, but it's also competency, technology, etc. So I think on a macroscopic global perspective, I think it's a net negative. For Central Europe, Berlin and the like, it's potentially a net positive.
Right. We'll come back later on the topics, but first, short introduction. So a bit about all your investment firms, focus, ticket sizes.
Yeah, we're doing digital tech and health tech all over Europe out of various fund streams. We have our East European fund in Istanbul, West European fund, Berlin, in Munich, and our health tech fund covering all sorts of all around Europe. We're doing predominantly early stage from C to Series B, starting to invest open funds right now in total 400 million.
Okay, average ticket size?
Average ticket size, I would say, in the first round, 3 million, total commitment per company, on average 10.
German Startups Group is a stock market listed evergreen investment company, so we're not a closed-ended fund. We are also stage agnostic, so we invest from seed stage to late growth stage, and we both also do primary and secondary deals, so also invest in, let's say, used shares, where a co-founder that left the company or an early business angel kind of wants to take money off the table. Our portfolio is quite diverse, so we have currently 46 minority investments, 1 majority, and so ticket sizes, depending on the stage, vary from 100K in a seed round to maybe 2-3 million in gross.
You must have a huge team covering all the topics and the different stages.
Now, the idea is that we are kind of the born co-investor, so we want to create an index fund, kind of the asset class of German startups, so that somebody who's buying our share indirectly has a broad mixed exposure to that asset class, where currently, if he's managing his private wealth portfolio, he can only buy a Tesla share or something, but there is little offer on the market for getting this direct or indirect exposure in the asset class of German startups, if you're not, let's say, a business angel hanging around Soho House and these conferences all days.
That is mean. We're on a conference, but I know what you mean. Yeah.
Yeah, I'm working for General Atlantic, which is, I think, the largest investment growth company in the world. We have 22 billion under management, and our ticket size is roughly around 150 million. We start with 50 million up to 400-500 million. Yeah. That means maybe the other side of the stick.
Yeah. Your investors not roaming Soho House and conferences?
I don't know. Probably not, no.
But you're based out of Munich, right?
I'm based in Munich. Munich and London. We're based in Munich and London, and our headquarters is in New York.
But you don't have an analyst or like a principal walking around here in Berlin?
No, we are, but it's the difference between Berlin and Munich. It's a 1-hour flight. Our office is based in Munich.
Okay.
What do you want?
Yeah, so I'm with e.ventures, and e.ventures is a venture capital firm that has a very global footprint. So we started in the US, but we're also in Asia, in Latin America, and then we cover Europe out of Berlin. And we have several different funds. So we have an early stage fund that we can invest anywhere from 1 to 10 million on the early stage side. And then we also have a global growth fund where we can invest 10 to 30 million.
Right. So we have this out of the way. We're going to talk about trends. We already talked about Trump and Brexit and the impact on the European ecosystem. But could you name some focus of interest, so some areas where do you particularly look at matching trends with ideas and with teams in Europe?
So I think, if I look back on this year, what we find very exciting is blockchain technology in general. I mean, we looked at cryptocurrencies. The investor appetite was not so great, but now we see companies actually utilizing the blockchain technology as their backend. So we did an investment in a company called Verse. They do a peer-to-peer payment app, primarily for Southern European markets. And what's interesting is that they use the blockchain technology as a secure general ledger, but the consumers don't even know about it. So it's not that the consumers have to be this kind of like nerdy cryptocurrency users, but they just utilize the technology to actually build the backend. That's pretty exciting to us.
Yeah. So what's the company called again?
Verse.
Verse.
Exactly.
Okay.
Yeah.
And
check it out.
Yeah, exactly.
Yeah. I think what I forgot to mention, we invest in emerging markets as well. The ticket size is 25 million and above. Therefore, we have a smaller round. Just we go down. What we are doing is we're looking at asset-light companies. Normally, in the smaller area, they should grow at least 50% per year. The market should grow as well. For the bigger tickets, we look at 10% growth per year. This is something that we look at. And the industries are quite broad. It's the typical artificial intelligence, BI, analytics, big data stuff. This is what we're looking at. Interesting at the moment is automotive. What's going on in the autonomous driving area? This is something we look at. We have multi-channel retail, which is quite interesting. It's going on around the world. These are typical tickets. I think we are quite broad. And fintech, it's an interesting one.
Yeah.
This is what we typically look at. And one very interesting thing is for larger enterprises, what we're going to do, we're going to help them to build their digital arm. Because it's always difficult to give to have these big enterprises and they develop out of their own digital expertise. And what we're doing is we help them. For example, the last one was with Axel Springer, ProSieben, and other companies.
But what's the goal with that? Because it's not scalable.
Of course it's scalable. You buy a lot and then you bring it back to the company after a while. That is you give it back to the investor.
But the advice alone is not. So you will urge them to invest together with you?
Yeah, together. It's much easier for them if we own a part of it. It's much easier for these companies to grow because we are, I wouldn't say the police, but we help them that these big compliance books get out of the way. If you have the big compliance books of small companies, they have no chance to grow.
Is that, by the way, because you were mentioning automotive, is it a German problem that they have a hard time, the bigger companies, to innovate, or is it in general?
I think, by the way, it's not hard to innovate. The problem is they need new technologies. The electric power is completely different. The autonomous driving is completely different. They need new ways to do this. And there are many, many companies around, even in Europe. Lots of companies in Europe have huge expertise. And we help them to bring these guys together and develop the new products, which are coming in the next 3 to 5 years.
Okay, so how many collaborations are you aiming for in the next year?
Worldwide or in Germany?
Germany.
2 to 3.
Okay.
Yeah.
In automotive, fintech, and?
Yeah, not many. We just look from a handful of, we don't do more.
Okay, interesting. Nikolas?
So we're not so much focused on one special market segment or one topic. We, of course, try to focus around, let's say, internet-driven topics because these are usually quite, let's say, easy to understand and efficient from the investor's perspective compared to whatever, biotechnology, for example. But within that topic, we have a very broad view and try to find out who's kind of the winning team at the end of the day. So we are very keen on joining serial entrepreneurs that set up a new company, and we have several examples of that in our portfolio. So there we usually just join like in the very first round and then extend our investment over time. And also, as I said before, so we are actively looking for secondary shares, which currently is kind of a market niche in Germany. Nobody else is really doing that. And so this is what we keep on doing, yeah, regardless if this year, whatever we had like a fintech wave, and next year, let's see if it's on the same level or something else comes up. So we're not so much sitting down in our team looking at the crystal ball, okay, next year let's just do whatever, Internet of Things or something. It's taking a broad look at the market, taking a look at the offers, taking a look at the hopefully most clever entrepreneurs, joining with them and their co-investors.
Are you happy with the quality of European serial founders?
Yes, absolutely. And I think this is just starting. So that's, I think, the big difference if you see articles like, is Berlin the next Silicon Valley or stuff like that. So it might be on a stage of the Silicon Valley, I don't know, 20 years ago, because just right now we have the second to third time founders that have the experience, that have built up companies, sold them off, and usually then either reinvest their money, so change the side, become business angel, company builders, investors, whatsoever, or just do it again and use the learnings they have, the contact base they have to do something. And teaming up with these investors for us, with these entrepreneurs for us, is the best idea because you don't have to kind of coach them. They know what you do. You can still help them in syndicating their rounds or discussing strategy. But I, as an investor, usually I don't want to invest in somebody that I need to coach. I don't have the time for that. Yeah. So focusing on that, and this is emerging. It's getting better and better every year.
What will be a branch for next year that you're not sure of if this is going to be the next wave, but that personally excites you for next year?
For example, so I'm personally like a big fan of what's happening in the drone space, for example. Yeah. But let's see what happens there. Of course, the Bitcoin, cryptocurrency, etc., everything that happens there. But we also see, for example, a lot of big corporates joining the game that look not for the super sophisticated rocket science models, but, for example, for plain vanilla selling insurances online in a clever upselling in the shopping cart, stuff like that, which is super low tech. It sounds stupid, but these are the business models where we currently see that big insurance companies start to make direct investments, start to ramp up their M&A teams, and because this is kind of close to their existing business. So as we're not investing like, let's say, Google X with a time horizon of 20 years, but we want to see a good return in whatever, 2, 3, 4 years, for us, of course, it's always very interesting to see if the industry comes to the marketplace, starts to make first direct investments, starts to discuss about path to majority things there, because then we see that exits will come in the shorter time frame.
Yeah. Are there for next year, for 2017, different trends in the Eastern and Western European fund?
To a certain extent, yes. I think it's converging. It's been even more different in the past, and that is just due to the fact that many of the obvious business models which have been developed in the West have not yet been so much developed in the East, and one could just take the business models without too much business model risk and deploy it in the East European parts. I think that opportunity is coming down, and we see increasingly more fundamental innovation also in the East European part, and it goes increasingly both directions. Same, by the way, what we observe in the relation between Europe generally and the US. Yeah? There has been times where the copycat model was pretty famous and successful over here in Europe. I think that's pretty much over, and we do see more a two-way route.
In what sectors then?
Basically everywhere. I mean, if you zoom out and say what has been the challenges in Europe with respect to venture-funded innovation or digital innovation, I think Europe has always been suffering from the fragmentation of its markets. Yeah? Right. 28 countries, different legal systems, 15 different languages, and so forth, which has increased the cost of scaling and the risk involved. On the other hand side, same GDP, one monolithic company, one language in the US, and that has decreased risks and increased opportunities. The second challenge Europe always had was the underfunding. Yeah? Per capita, there is a differential of factor 10 being invested in venture capital in the US and Europe. And these two challenges have caused the situation where we have seen only a fraction of unicorns coming out of Europe as opposed to the situation in the US. I think what has changed now is that the first challenge has basically faded away, because in the internet the market is unique and equal for everybody. So we are much more on a level playing field than we used before. What remains, though, is the scarcity of capital, but that also is improving. So that, I think, is one of the reasons why we have seen significantly more momentum with respect to significant digital companies coming out of Europe than in the past decade. I mean, just by numbers, in the past decade, we have only seen 3 companies reaching $1 billion valuation out of Europe. Yeah? Skype, MySQL, and Autonomy, as opposed to 50 companies coming out of the US. And if we now take the first 5 years of the current decade, we've seen roughly 50 unicorns coming out of Europe as opposed to 150 in the US. So generally the number of unicorns has been inflated, but the ratio between US and Europe has been significantly improved to the favor of Europe. And I think we discussed initially Brexit and Trump. I think that catch-up race of Europe is going to go on.
I mean, maybe to add on that, but because I think it's a very, very interesting topic. I mean, I agree that the European market is heavily underfunded if you compare it to the US. At the same time, I think it's right now it's also the best time for an entrepreneur to start your company in Europe. So you see, the first wave of successful companies, in Germany, like Rocket Internet and Zalando, or also, Supercells, they all, breed kind of a generation of founders that give back. They start angel investing. They educate new entrepreneurs. You have the first employees out of these companies coming there.
Do they also have the original ideas that can really become global, have an impact?
Absolutely. I think, as Hendrik said, I mean, the copycat model, it's literally over. So there's a lot of new innovative ideas coming, and I think I'm pretty positive. And I think if you compare us to the Silicon Valley, it is not only a location; it is a philosophy that has been perfected over 50 years. So it's very hard to compare. I think we're getting there, but it just takes time.
I think beyond just looking at the numbers and seeing a change in the quantity, you can also see a change in the quality. So if you take a look at the typical German startup today, you have to put German in quotation marks because already 30 to 40% of the people there have international background, are international talent. And so I would personally say that 10 years ago, the typical German founder kind of first approached the German domestic market because it was quite big compared to, for example, the Scandinavian founder who knew that if he develops a product just for the Swedish market, it just doesn't make sense from scalability reasons. But today we have like lighthouse examples like these SoundClouds, etc., where you have international teams.
What is happening to SoundCloud? Are they now selling or not to Spotify? Because it's a weird situation now.
Let's see. Yeah, but the good thing is
you haven't heard that it's already done, the deal.
The good thing is, so I cannot comment on that. The good thing is that the international founders coming to Berlin and international teams, they will build an international company from day one, and this is the change in the quality. So I think some years ago you could have argued about if the level of, let's say, methodology in Silicon Valley is different to the German ecosystem. Maybe it still is a little bit, but I think it has changed quite good. And especially in internet economy, you can build a global company out of anywhere.
Maybe regarding your question, what would I do and what is in the market? There's a lot of money in the market, you're right. I think in 2000 we had 28 billion investment in private equity. In 2006 it was 500 billion, and the first half of 2017 was 500 billion as well. This is a lot of money in the market. But what is the industry I would invest in? What is the typical, what we hear is, no technology, yes, but is there an industry I would invest in the next couple of years? Probably yes, there are a few. For example, the insurance companies. If you look at insurance, they don't have money, most of them, because the interest rates are so low, they lose a lot of money. The second one is old sales model, old structure, very, very hard to deal with. This is a company which needs innovation, or the industry which needs really innovation. That would be an industry I would invest in the next couple of years. There must be a change in the next 3 to 5 years. There must be something different. And let's wait and see. But this is a typical industry I would go and look after at the moment.
Okay. Go on.
No, another one. This is just a good example.
This is the example. Okay, so one of the companies that you will develop corporate innovation investment models with is Allianz.
The company Allianz we're talking, no.
Yeah, the Allianz. Allianz was here before on stage.
Okay.
This is an insurance company. I'm trying to get some news that people can Twitter about.
Perfect. Thank you. Next one.
Next one. Okay. So are there already some questions? Because we have a couple of minutes left. Please take a microphone and ask your question. There, on your right and on your left, on both sides. You have to talk loudly.
Okay, so I would like to ask about the social part of entrepreneurship, because it might be my bubble, just to go back a bit to the politics, that there is a lot more millennials are interested in the impact of their work and maybe not just the money that they can do throughout their life. And how do you see it from the investor perspective, which is generally, let's say, a somewhat older generation?
Can you repeat again?
So I can also. Can you hold it closer to your mouth, please?
Yeah. So can you hear me now?
Yeah.
Okay. So like it might be my bubble, but I'm interested in the view on how do you see impact investing growing in the sector, because a lot of millennials, as myself as well, are more interested in the impact of my work rather than the how much money I can make throughout selling the company later on. Do you see it as like a growing trend throughout startups?
I take that. Yes, there's a trend for impact investing. We see it in various dimensions. We see the increasing momentum of Ashoka, social venture funds, and so forth. Is it becoming a mainstream and a significant part of our industry? No, it's not. It remains a niche. It's a growing niche, but since the entire industry is growing, I think the niche or its share from the entire industry is not really growing. That's my perception.
Very honest answer. Any comment or different opinions on that, on impact investing? No, same. Some more questions from the audience? I mean, you have 4 investors here. There must be one startup that wants to be under the eye of attention of 4 different investors at the same time. Go to the microphone, mention your company's name and ask a question, please.
Yes, I have the following question. If you compare America, especially Silicon Valley and Germany, the American models are very strong focused on end users, on customers, B2C models. Is there not a problem in Germany to make good B2C models, or is our strength to make B2B models, and are the investors ready to make big B2B model investments?
Maybe you can answer.
No,
Achim?
I'm not sure if I see the same trend. The companies I'm talking to, they're going to B2C as well in Europe, especially in Germany. So we have just invested in a company who was really go into B2C. Maybe the only thing I think you're right is the market, the US market is much bigger than the German market, for example. That maybe it's more interesting to go to B2C, but I don't see the trend maybe in the PE sector, in the VC. I'm not sure if there's a different view. Do we have different?
I think that this is one of the kind of cliches, yeah, that the Germans are inventing it, but are weak at selling it, yeah, and the US guys are very strong in marketing. That kind of is, yeah, decreasing the difference, but still this is a reality. If you are addressing a domestic market that is so huge as the United States, you will just have more marketing spending, so you can just be louder and more aggressive in marketing. But still, I think that we have significant B2C models that are also unique, not just copycats coming out of Germany. So I would not say it's a general difference.
Okay. I personally think, yes, there is a certain difference, and there is certain strengths in the American mentality for consumer marketing, and I think we can learn from that in many dimensions, and that's probably one of the reasons why we have seen most of the B2C globally leading companies coming out of the US. On the other hand side, I must say the most obvious and trivial digital business models are probably B2C. So you start with e-commerce before you think about deep, I don't know, enterprise integration, whatever it is. I think in the a little bit more mature phase of internet right now, we're seeing an increasing share of interesting enterprise models. And I do believe that might play more into the field of European intrinsic strength. So again, another point where I feel optimistic for our future.
Final question from the audience before we conclude. Yes, go to the mic. Oh, super.
Yes, hi. How should one approach an investor? Because often investors we talk to wanted to see some traction before an investment. And that's basically a chicken-egg problem because you don't have traction without money, basically.
Yeah, so maybe let me add on that. So I think what investors want to see is how far can you go with the limited access to funding you have. So I mean, ideally, you have a very specific skill set, or you have a team that has a very diverse set of skills, and with that team, you can already achieve something without capital. Because for us, obviously, it's very hard to judge you just only based on the idea, and by seeing how far can you go without funding, just with your own skill set. That's a very good indicator what you can actually achieve if we give you money. And I think how to approach VCs. I think a lot of us are around conferences. Approach us. Maybe look at the investor's portfolio, see what has he been investing in recently. Are there any spaces the investor is particularly interested in? And then really try to target that investor. Don't do any mass mailings. I mean, really try to approach an investor very personally and directly.
It's a perfect ending to this slot, giving this young guy such a great advice. You will be also available back of the stage around here to talk to aspiring entrepreneurs. I hope you all had fun, that you twittered. You see the Twitter handles here behind us if you want to get in touch over Twitter with these guys or else in person. And now, finally, give it up a big applause for all these wonderful gentlemen. Thank you so much.